You weren't supposed to notice what happened today. Not like this. Not this fast. One moment the screens were calm, and the next, the Sensex didn't just fall, it collapsed. 1,500 points, erased like it was nothing. Nifty slipping under 24,900 like the floor was never real. And the reason they're giving you a simple budget proposal and a small STT hike is the kind of explanation that sounds clean, simple, harmless. But that's exactly the problem. Because the real story isn't about a tax. It's about what happens behind the curtain when the system decides it needs liquidity. It's about the moment the market stops being a marketplace and becomes a machine. And if you want real financial truths, they don't teach. Hit subscribe and turn on notifications. You don't want to miss what's coming. Because what you saw today wasn't random. It wasn't an accident. It was a signal, a ripple. And ripples always mean something bigger is moving underneath. Most people think crashes happen because investors panic. They imagine millions of people waking up, feeling scared, hitting sell, and the market tumbles. That's the bedtime story. The version that keeps the average mind comfortable. But markets don't move like that anymore. Not at this scale. Not with this precision. This wasn't a human stampede. This was mechanical. This was liquidity extraction dressed up as fear. A tiny proposal hits the news. Traders get spooked. Headlines scream chaos. And the herd responds exactly how it has been trained to respond, with emotion. Fear tightens the chest. Greed whispers, get out before it gets worse. The mind becomes a survival animal. Click, sell, click, panic. And while retail minds are spinning, someone else is completely calm. Someone else is buying because the market doesn't punish ignorance. It rewards discipline, and it feeds on emotion. You have to understand something most people never do. The stock market isn't just prices moving. It's psychology. It's warfare. It's a battlefield where the strongest weapon is your own mind. And today was a perfect example. Sensex down 1,547 points. They tell you it's because of the STT shock. The narrative is clean, too clean. Because in reality, taxes don't crash markets in minutes. Not unless the market was already fragile. Not unless the elites were already positioned. Not unless someone needed an excuse. This is how it works. The system never moves without cover. It always needs a headline, a story, a reason the public can digest. Budget, tax, war, inflation, anything. The event doesn't create the move. The event is the mask for the move. Behind every crash is a transfer. Today, money didn't disappear. It moved. When the Sensex drops like that, where do you think those billions go? Into thin air? No. Wealth doesn't evaporate. It migrates. From emotional hands to disciplined hands. From retail panic to institutional accumulation. From noise to silence. This is the liquidity trap. They create a moment where the weak sell, the strong absorb, and then the cycle repeats. Because markets are not designed to make everyone rich, they are designed to concentrate wealth. Think about the timing, budget season, policy headlines, everyone watching, everyone tense. Retail investors already stretched thin, already addicted to green candles, already chasing returns. Then a shock, not massive, just enough, like tapping a glass to crack it. And suddenly the machine does what it always does. Stops out leverage, triggers algorithms, forces margin calls, creates a waterfall, not chaos, order. A crash is not a breakdown, it is a harvest. Whales don't fear red candles. Whales wait for them. In crypto, you see it clearly. A whale dumps, price crashes, retail screams, and then the same whale buys back lower. In stocks, it's the same game, just more sophisticated, more regulated looking, more polished. Institutional money doesn't chase hype. It manufactures it. Then it manufactures fear. The human brain is predictable. That's why it's exploitable. Fear makes you sell bottoms. Greed makes you buy tops. And the media exists to amplify both. Look at the language today. Spooked traders. Market bloodbath. Shock waves. They are engineering emotion. Because the real battlefield is not the chart. It's your nervous system. If they can control how you feel, they control what you do. If they control what you do, they control where money flows. And money flow is power. Most people never ask the deeper question. Why does the system always feel like it moves against them? Why does it always seem like the crash happens right after they finally buy? Why does it always reverse after they finally sell? Because retail doesn't trade markets. Retail is traded by markets. Today wasn't about the STT hike. That was the trigger for the story, not the cause of the move. The cause was positioning. Elites don't react. They prepare. Before crashes, the smart money is already exiting quietly. They don't sell in one candle. They distribute over weeks. They let retail soak up the supply. They let optimism peak. Then when the exit is complete, they pull the rug. And when the public looks up and asks what happened, the media hands them a reason. Budget shock. Simple. Comfortable. False. Because the real truth is darker. The market is a mechanism of silent resets. And every few years, the system needs to reprice assets. It needs to clear out excess speculation. It needs to punish leverage. It needs to remind everyone who owns the game. Currency debasement is the invisible background of it all. Your money is decaying in real time. Inflation is not a number. It is a transfer of purchasing power from the many to the few. Every year, your cash buys less. Every year, assets become more expensive. Not because assets are magical, but because fiat is weakening. The system prints, the currency dilutes, and the only way to survive is to own real things. Assets, equity, hard stores of value. But here's the twist. Even assets are manipulated in cycles. They let you in during euphoria, then they shake you out during fear. That's the game. That's why days like today matter, not because of the points lost, but because of what it reveals. It reveals that markets are not democratic. They are hierarchical. Retail investors think they are participants, but most are liquidity providers. They are the exit liquidity for the elite. And the elite doesn't need you to understand. They need you to feel. Feel confident at the top, feel terrified at the bottom. That's psychological control. Look deeper. Institutional accumulation always happens in silence. When headlines are darkest, when everyone is convinced the world is ending, when fear is thick, that's when the real wealth transfers happen. Because value is bought in blood. And today was a blood candle. But the scariest part is what comes next. Because crashes don't begin with collapse. They begin with permission. A market that drops 1,500 points on a policy whisper is a market telling you something. It is telling you liquidity is thin. It is telling you positioning is fragile. It is telling you the next move could be bigger. Liquidity cycles are like tides. Institutions move with them. Retail drowns in them. When liquidity is abundant, everything rises. Stocks, crypto, real estate, optimism. People believe they are geniuses. Then liquidity tightens, rates rise, taxes shift, policies change. Suddenly the ocean pulls back, and everyone realizes they were swimming naked. That's when the traps spring. Whales exploit herd mentality because humans are wired for social proof. If everyone is selling, it feels safe to sell. If everyone is buying, it feels safe to buy. But safety is the illusion. The disciplined win. The emotional lose. That's the law, and the system has spent decades training you to be emotional. Notifications, breaking news, constant charts, dopamine highs and green candles, panic lows and red ones. The market is not just finance, it is addiction. And addiction makes you predictable. Predictability makes you profitable for someone else. Now imagine the elite view. They see today not as disaster, but as opportunity, a reset, a clearance sale, a moment to accumulate while the herd trembles. They are not watching the news. They are watching flow. They know every crash is also a door. And here's the twist most people won't admit. These crashes are necessary, not for you, for the system, because a market that only goes up creates rebellion. It creates too many winners, too many people outside the hierarchy. The system needs volatility. It needs fear. It needs reminders of control. So today, the Sensex didn't just fall, it spoke. It whispered that the machine is still hungry. It whispered that liquidity is being extracted. It whispered that insiders are repositioning. And if you're paying attention, you realize this wasn't an ending. It was a signal. The silent reset doesn't happen in one day. It happens in phases. Shock, fear, capitulation, accumulation, repricing. The question is, where will you be mentally when the next phase arrives? Will you be emotional or disciplined? Because the biggest secret is simple. Real wealth is not built by reacting. It is built by understanding the cycle before the crowd sees it. That's why the elite always win. They don't play the same game. Retail plays price. Elite plays psychology. Retail plays today. Elite plays decades. Retail asks, why did it crash? Elite asks, who needed liquidity? And once you start thinking like that, money looks different. Reality looks different. You stop seeing charts. You start seeing control systems. Today was not just a crash. It was a lesson, a warning, a glimpse into the hidden architecture of wealth. The market is not your friend. It is not your enemy. It is a mirror. It reflects discipline. It punishes emotion. It rewards patience. And the people at the top, they understand that the human mind is the asset being traded. So here's the elite takeaway. When fear is loud, value is quietly being bought. When headlines scream, accumulation is happening in shadows. When retail panics, the system resets. Never forget that, because the next crash will not feel like an opportunity. It will feel like doom, and that's exactly when the real money is made. So tell me, do you think today was truly about a tax hike? Or was it something deeper? Drop your answer in the comments. And send this to someone who needs to hear it, because most people will never see the market the same way again. Subscribe, turn on notifications, because what's coming next will separate the awake from the asleep. And remember, the crash is never the accident, it's the transfer.